In the dynamic world of business, fortunes can rise and fall in the blink of an eye. A Singaporean powerhouse, Sea Limited, once stood tall among global giants, its valuation towering above even the combined worth of three major banking titans in Singapore. But fast forward just a year, and the narrative takes a dramatic turn. The market's verdict? Sea Limited's valuation plummeted, leaving investors, citizens, and consumers alike questioning its stability. And it's not alone in this turbulent journey. Grab Holdings, another tech stalwart from Singapore, faced a similar fate, with its value nosediving from its peak. What sparked this astonishing reversal of fortune? Has failure crept into the corridors of these once revered companies, or are larger forces at play? Join us as we unravel the gripping tale of Sea Limited and Grab Holdings, from soaring triumphs to staggering setbacks, and delve into the heart of what led these giants to become the unexpected casualties of Southeast Asia's business landscape. Explore untold stories of iconic brands and personalities at the Bullish Society. Uncover forgotten archives, secrets, and narratives that shaped our world. Meet visionaries, voices of change, and immerse yourself in defining stories. Subscribe now and join our community of storytellers. Don't miss the tales behind every success and failure. Before we delve into the specific challenges faced by each company, let's first address the broader issues at play. While internal management certainly plays a role, we cannot overlook the macro challenges that have impacted not only Sea Limited and Grab Holdings, but numerous other tech firms worldwide. These challenges include rising interest rates due to unexpected inflation, geopolitical tensions, such as the ongoing conflict in Russia affecting commodity prices, and shortages in the semiconductor industry, crucial for tech sector growth. Thus, the significant drop in valuation witnessed by Sea Limited and Grab Holdings cannot be solely attributed to internal management issues, but also reflects broader global challenges. Additionally, both companies experienced rapid valuation growth, perhaps surpassing their true value, which contributed to their subsequent decline. Sea Limited, in particular, saw a remarkable surge in valuation during the COVID-19 pandemic, driven by the accessibility of its products and services despite lockdowns. As the reigning internet company in Southeast Asia, Sea Limited's portfolio includes Shopee and Garena, prominent players in e-commerce and online gaming respectively. Now, let's take a closer look at Sea Limited. The company's success can be attributed partly to the COVID-19 pandemic, which boosted demand for online services, but also its dominance in the relatively uncompetitive e-commerce and gaming sectors. In its annual report for 2021, Sea Limited revealed staggering growth figures. Compared to 2020, the company's total revenue more than doubled, reaching a remarkable $9.9 billion. This surge was primarily driven by its flagship brands, Shopee and Garena, which reported sales of $5.1 billion and $4.3 billion respectively. Additionally, Sea Limited's financial services division contributed $400 million to its revenue stream. This exponential growth caught the attention of investors, prompting a surge in stock purchases as they anticipated continued expansion. What's particularly noteworthy is that not many companies achieve such a feat of doubling sales within a year. Sea Limited's remarkable performance was applauded across various quarters, especially considering the untapped potential of the internet economy in Southeast Asia. Moreover, Sea Limited adopted an aggressive global expansion strategy, venturing into new markets across Asia, Europe, and South America. However, amidst the optimism, there lingered a note of caution. While Sea Limited enjoyed undisputed leadership in its home region, the viability of its international ventures remained speculative. The discrepancy between Sea Limited's valuation and the Southeast Asian internet economy is indeed striking. While the entire region's internet economy was valued at $174 billion by the end of 2021, Sea Limited's valuation hovered close to $200 billion. This raises a pertinent question. How could Sea Limited's worth surpass that of the entire internet economy of the region it operates in? It's essential to understand that the term internet economy encompasses a wide array of industries, including e-commerce, ride-hailing, live streaming, and more. However, Sea Limited's operations were confined to only a few sectors within this vast ecosystem. Despite this limitation, speculation fueled the belief that Sea Limited could capture a significant portion of the region's internet market share. Yet, Sea Limited encountered challenges in its overseas ventures. Shopee, for instance, withdrew from several international markets, citing stiff competition. Meanwhile, Garena faced a severe setback when its flagship product, Free Fire, was banned in India, one of its key markets. In the second quarter of 2022, Sea Limited's financial performance painted a mixed picture. While overall sales increased from $2.2 billion to $2.9 billion, there were concerning signs. Shopee's sales rose to $1.7 billion, but Garena's revenue plummeted to under $717 million. Moreover, the company incurred a staggering loss of $500 million, a significant contrast to the relatively modest loss of $24 million in the previous quarter. Several factors contributed to these challenges, while some operational strategies fell short. The shift in consumer behavior post-pandemic also played a role. Many consumers, once avid purchasers of internet goods, now favored offline retail and entertainment options. Grab, on the flip side, presented a different narrative. While the reopening of economies saw a surge in demand for ride-hailing services, Grab found itself grappling with significant losses. Despite its optimistic debut on the stock market at the end of 2021, the unveiling of Grab's financial data unveiled a sobering reality. Expectations of monumental sales were met with the stark reality of a startup in dire need of substantial capital infusion. The company found itself burning through cash at an alarming rate, relying on continuous borrowing and fundraising to sustain its operations and meet projected targets. However, the pressing question loomed: when would Grab achieve profitability and reduce its dependence on debt? The figures spoke volumes. Within just 2 quarters since its listing, Grab had incurred losses nearing $1.4 billion. By the second quarter of 2022, its cash reserves had dwindled from $4.8 billion to a mere $2.6 billion. The underlying causes of these companies' downturns are multifaceted. While mismanagement plagued Sea Limited's expansion into unsuitable markets, Grab's relatively nascent public presence complicates the analysis of its driving factors. Yet, both companies face the formidable challenge posed by macroeconomic factors shaping the global landscape. The burning question remains: can Grab sustain its current trajectory, or will it necessitate a strategic pivot in response to evolving market dynamics? As we ponder these questions, it's evident that the challenges facing Sea Limited and Grab extend beyond their financial statements, presenting a complex interplay of internal and external factors. Thanks for joining us on this captivating journey through the stories that shape our world. Your support keeps the Bullish Society thriving. Subscribe and ring the notification bell to never miss a captivating story. More incredible stories and interviews are coming your way. Stay tuned for what's next on the Bullish Society.